Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short knowledge for everyone. My name is Alex Cho, and today in this video I'm going to talk a lot about stocks and just about stocks. First of all, Apple Incorporated had a major pullback on the day session, and this is where a lot of stocks started pulling back. As you guys can go ahead and see, this Apple stock started out all the way up to around 525, pulled back, gave back the whole day gain, and then on top of that it gave back 2.5. So pretty much what happened here? Well, there doesn't seem to be that much short interest in the stock, less than 1%, according to what I'm seeing. Not a whole lot of beta. Seems to be a lot of demand, a reasonable price to earnings ratio. Stock has been going up for quite a while now, as you guys can pull back 6-month and even to a 2-year chart. Just notice this. I mean, this stock has been going on an upwards tear for quite a while now. Earnings have been phenomenal, and they've continued to grow at a very, very rapid rate. And if they can sustain this rate of growth, chances are that net income will be able to exceed what ExxonMobil earns in a single year. The bigger concern here is not necessarily that Apple has done a poor job of making money. The issue is that I don't think there seems to be enough money to go around to buy the stock. The pullback was on fairly high volume, not too high, not as bad as before, but still seems pretty high. As you guys can go out and see, we went all the way up to around 80 million, no, 60, 55, 58 million in volume on the day's trading. So again, typical trading behavior for a day that's high volume. Again, low volume implies more upside, high volume implies, people are starting to sell their positions. Right now, Apple has pulled back, and I can see it continuing to pull back a little lower. Pulling back, as far as I'm concerned, I can see 480 being the first area, just right at that gap area, and then right below that would be around 475. Now, the bigger concern here is not necessarily Apple, but the fact that the whole entire stock market was pulling back based upon that. And basically, the Dow Jones Industrial has had a pretty significant pullback, went all the way down to 12,780, negative 97 points on the day session. All right, now let me go ahead and show you a quick chart of the Dow Jones Industrial. Again, the Dow Jones Industrial Average had a pretty negative day on the day session, and at 12,780 is where it finally closed at. Overnight, European stocks are pulling back by approximately 1 to 2% across the board throughout Germany, France, Italy, Spain, and basically been an awful trading day in the overnight session as well in Europe. So let's move on to some more names in the stock market. First of all, Lionsgate Entertainment. Again, this stock is way overextended, and based on the negative momentum we're having in the overnight session in European stocks, S&P 500 futures, I could definitely see the stock pulling back, going all the way back to 2007 highs. This stock has just pierced it. I went short yesterday in the evening session. Chances are I could see this stock reining in and giving back some of those gains. Again, this move is very parabolic. You might as well call this a hockey stick, and typically hockey sticks don't happen, and when they do form, just gotta wait for an approximate area where the stock will eventually run into some resistance. Right now, that resistance seems to be the 2007 high. Therefore, since the 2007 high seems to be in place and it seems to be struggling above it, plus macro concerns such as the broader markets are pulling back, chances are the stock will pull back with the broader indices, and therefore I can see the stock pulling back even further. Right now, this move is being fueled on higher volume. Again, not exactly certain what that implies, but again, if this stock pulls back, it's going to pull back fairly hard. Going into it, I anticipate it to pull back and at least fall down to that 20-day moving average for first support, and perhaps all the way down to that 50-day moving average at $9.50. I tried shorting the stock initially, but it didn't really work out. I had to give back some of those gains that I initially had, and lo and behold, we're just going to see where it takes us again. So again, I actually shorted somewhere around $10, went all the way up to $10.90, where I had to cover, but I'm going to go ahead and short the stock again and see where it takes me. Moving on, Lockheed Martin. This is an interesting stock. Again, I'm going to go ahead and show you a 5-year chart. 5-year chart, 2-year chart perhaps might be a little easier on the eye, but basically, we're running into a topping pattern right here. It has broken above it a little bit, but the issue here is, again, the U.S. government is pulling out from Iraq, from Afghanistan. A lot of defense spending is going to be cut and frozen. Therefore, I don't see a whole lot of upside in Lockheed Martin, at least not in the near future. BAE Systems, Europe's largest defensive contractor, just came out and reported earnings. For the most part, they missed expectations. Stock fell by -4%. U.S. budget cuts causes uncertainty from the management. So again, that just reconfirms what I was saying about Lockheed Martin a couple months ago. So I anticipate this stock to continue going lower. And let's go ahead and move on to the next stock, which is going to be Starbucks Coffee. Okay, Starbucks Coffee is, of course, one of my favorite companies. It's the place I personally love going to. The thing here is, again, Starbucks is a great stock. I anticipate, consistent growth coming from them. Their whole entire internet cafe type of setup has, consistently led to some great growth opportunities in the company overall. Again, a lot of exposure to new customers, sales have been going up, revenues have been going up, and the costs have been well managed overall. The issue with Starbucks right now is that overall the macro concerns are what's causing the Dow Jones Industrial pullback a little bit. Again, it's just a macro pullback, just going back all the way to the Dow Jones Industrial Average again. And what you'll notice is that since we're having a fairly decent pullback right here, perhaps 3 to 5% all the way down to that 200-day moving average, somewhere between here. Chances are Starbucks will pull back, but it is a great company, and I do anticipate much more upside potential in this stock. BAE Systems. Now, this is the company I was mentioning earlier. This is the ADR, sort of the depository receipts trading on the NYSE, or I think the NASDAQ actually. And basically, BAE Systems is pulling back. It has a topping tail. It fell 4% overnight. Chances are you're going to see the stock gap down and perhaps break below the 20-day moving average. Not surprised there, but the sympathy play here, or what's going to cause it to react, is Lockheed Martin. Lockheed Martin will most likely have a negative day in reaction to BAE Systems' horrible results and their negative guidance. Okay, all right. Moving on, let's go ahead and talk about the next chart, which is going to be Las Vegas Sands. Now, Las Vegas Sands, again, here's another stock. It's a company, it's a gambling company. I get it. Now, this company is already topping out as well, right here. Okay. Now, this company has had a lot of positive momentum, and it's a little range bound. We're going to go back a year or so, and basically, this company I don't see it really breaking above from this area, at least not anytime soon. So, again, negative sentiment here as well. Broader market pulls back, and chances are this is going right back down to that 200-day moving average for approximately 10 to 15% decline. Again, this stock will most likely have a fairly negative move in the next couple days, if not weeks. Alright, now let's go ahead and analyze the next chart, which is going to be Bank of America. Again, Bank of America has its own set of issues. SocGen, or Societes Generales, announced earnings overnight, and that company as well has had a hard time. While their net incomes fell 90% over previous year, which isn't very good. And SocGen, or the whole entire European banks, the European banking sector has its own set of issues, but basically economic growth is contracting across the board in Europe, and that has a lot to do with government austerity across all the countries that are involved in the EU. Okay, so these new measures will cause economic contraction, and when you have economic contraction, people pay less, are unable to pay their mortgages, basically, and that's going to have a negative impact on banks. Bank of America, being an investment bank, investment advisory, and does a lot of financial services, will have negative exposure no matter what, unfortunately. So, again, that's one issue. Another issue that's going into this is Fitch and Moody's downgrades, and they're threatening to downgrade by 2 notches, which is extremely negative. That's going to cause the interest rates, or the corporate bond rates, to go up substantially for Bank of America and every other financial company. It's just that Bank of America is harder hit. Typically, Bank of America notes are trading on the secondary market for around 7% yields. So again, Bank of America is going to have a harder time, and therefore it's going to pull back. And right now, I'm already short the Direxion bearish 3 times ETFs. So again, that would be the FAS ticker symbol, although I don't have enough time to talk about it. Visa. Okay, so in retrospect, if you're a longer-term investor between Visa and Bank of America, Visa would be a much better choice. Main reason is because again, it's not lending money; it's just a credit services company. It uses its brand to allow people to buy products and services. It's kind of like it's kind of like this network, I guess you could call it. But you guys have your own Visa cards. Basically, you take your Visa card, you swipe it, they access your bank account, and Visa is the intermediary between perhaps McDonald's and Bank of America or whoever it is you bank with. It's an intermediary. It's a middleman between the two companies, and basically, because they're the middleman, they earn 20 cents per transaction fee, and those transactions are increasing in volume quite a bit, and that's just causing the stock to go continuously higher. Very little risk, but a lot of upside. Okay, Wells Fargo right here. Wells Fargo is in a tough pinch, although it is in a slightly better position than Bank of America because, again, they didn't acquire an investment bank that had tons of derivatives that were exploding on the balance sheets. Still, being a financial company, Wells Fargo is exposed to the whole entire financial issue coming out of Europe and the rating downgrades, so therefore financials as a whole will most likely have a negative day, and therefore Wells Fargo will most likely pull back on the day session. Moving on, Netflix. Netflix has had a pretty solid move upwards, but again, we've seen the stock tank before, and it would be no surprise to see the stock collapse and perhaps break below that 20-day moving average and continue a little lower. Again, this is just a cyclical pullback, and a cyclical pullback in the markets after earnings have been released. There's a pump, and here's a dump. Okay, Sears Holding, this stock is a little way overextended. It did push out a little bit. It's running right back into that 55 area, although I'm not convinced retail will be able to make it, considering the fact a lot of stocks broadly are being sold off. Trust me, if a company like Apple or Stalwart is going to get pinched, then chances are Sears Holding is going to get jabbed. Moving on, let's talk about the next chart, which is Amazon. Amazon right here is also having a nice little move upwards, but again, their earnings haven't been that great, and not only that, they're planning on releasing a retail division that's a brick and mortar. Don't really understand why, and the biggest issue right now is that the stock is already heavily overvalued. That does it for me for today. If you have any questions, leave a comment right below.